All right, so today we're going to look at the top 10 retail stocks, meaning stocks that you and I, the little guys, are buying. And there are some big surprises on this list. And honestly, I was just shocked when I looked at some of the names on this list, and there's some huge changes. Not only on the stocks that are on this list, but on the stocks that didn't even make this list at all. So let's go over each stock individually and kind of break them down individually and see whether or not I'm gonna pump them or I'm gonna dump them. So if you like me going over some stocks that I talk about, some stocks that I don't talk about at all, and kind of putting it all together, make sure you like this video so that way I know that you actually enjoy this content. And check out the pinned comment down there for my new channel where we talk about financial freedom and retiring early. That's all that we discuss there, so make sure you check it out if you want content like that. All right, just keep in mind here, guys, that when I'm saying pump it or dump it on these stocks, I'm viewing it from a long-term buy and hold investor's perspective. I am not trading, so there might very well be a trade there. I have no idea. That's not how I'm viewing them. I'm viewing them as a long-term buy and hold investor, if I could talk. That right there is the perspective that I'm coming from. That's how I'm judging these stocks. And don't worry, I have a full breakdown of PayPal's earnings coming to you guys on Sunday. I already gave it to my group there, but I'm going to give you guys one too. But let's see if PayPal made this list of the top 10 retail stocks that retail is buying. So stock number 10 is GameStop. Guys, once again, I don't know why we're buying this stock. I guess people out there still think the ultimate squeeze is going to happen. I have no idea. But fundamentally, there's nothing there with this stock either. It is simply a trader's game at this stage, some other game being played. So from a long-term buy and hold investor's perspective, this is 100% a dump it. I don't understand it. It seems to make the list every time. But hey, here we are. I can't argue with the list. I just got to tell you guys what the list is and then kind of give you what I would do with it. So stock number 9 is Disney. Now here's a stock right here that it has a great run. I actually bought shares at $79 or so just a few months ago. And man, if those shares ever rocketed up, and once again, it had really good earnings and it's moving up again. So it looks like Bob Iger's slowly starting to turn the ship just a little bit here. Now, keep in mind, there is a long way to go with this stock. They have business problems. I don't care about any of the other garbage that's going on around Disney, one way or the other. I care less about any of that sort of stuff. I'm looking at the stock and the business, and they still have a lot of business problems that they're trying to solve. They're making progress on, but they are not all the way there yet. They are still kind of maybe the beginning third or so of that journey. And so you have to understand that. So for me, it's a pump it, but it's definitely a cautious pump it because we're not far enough along for me to say that the business turnaround is going to be successful long-term. It's not far enough along for me to say that yet. So stock number 8 is Meta. Look, I don't know what else to say about Meta. I was screaming buy, buy, buy way back in 2022 when this thing was down at 80 bucks. I was screaming buy at 100 bucks, 200 bucks, you name it. I don't know. For me, right now, with everything they're doing, they are clicking on all cylinders. It is a cash machine beast. There's just, I can't say enough great things about what the management team's doing. And you got to keep in mind, guys, and this is kind of the bigger thing. I agree. They're finally getting up to where they're starting to trade a little bit rich now, but they are doing share buybacks. They are also giving us a dividend. And you got to remember, he has not even turned on monetization yet fully with WhatsApp and a lot of other things out there that have billions of users that they still have yet to actually tap into and start producing cash flow from. So for me, when I'm looking at Meta, there is still a very, very long runway. Even if they do nothing new over the next 5 years, there are so many different ways they can make even more money than they're already making that for me, it's a stock. Hey, I am so glad that I was in it long before anything ever happened. And then whenever it cratered down, instead of listening to the noise, I'm so glad all of you guys and a lot of other folks out there were pouring into this stock because it is just a cash flow machine. There's nothing much to say. So for me, it's a pump it. And yeah, valuations get a little bit rich right now, but there's a lot of levers they can pull to continue this growth moving forward. So stock number 7 is AMC. All right, guys, I don't know what we're doing here as a retail community, but how you have AMC over Meta is just baffling. And it's not the first time Meta's fallen on and off this list. But I don't know what to tell you guys. I don't know. I guess people still think $100,000 per share is viable. I don't know. It's impossible. It's mathematically impossible. Like, it doesn't matter, regardless of what everybody has to do if they had to follow the rules and everything else. It's mathematically impossible. There's not enough money in the world to do it. So it's just one of those things. I don't know what it is here. Maybe there's a trade. I have no idea. But I just know theater chains buying gold mines usually equals not a very good management team and a poor stock. So for me, it's a dump it. Stock number 6 is NVIDIA. Look, just like Meta, I got nothing bad to say about this stock. They have continued to not just have good earnings performances, but great earnings performances, and they continue to reset their valuation over and over and over again. Now for more than a year, they have gone a valuation reset. Everybody thought, hey, look, it's to the moon. It's trading super rich, get out, all that sort of stuff. Just for them to the next earnings call, come right out and reset that valuation once again with a great performance. And I don't see this slowing anytime soon. It seems like a lot of other people who were going to be competitors have started to kind of fall out of the race a little bit and just say, screw it. We're just going to buy NVIDIA's chips. Theirs are just better than anything we can come up with. So for me, I don't know where the runway is for this stock in terms of the length of it because I have not studied it deeply like I have a lot of other stocks. NVIDIA is chip stock, and I just don't understand the business model there with chips. But all I know is that for this one right here, it has continued to outperform and have a bar set higher, and then they outperform that bar. So for me, I got nothing else to say. It's a pump, and I don't know what else to tell you guys. Stock number 5 is Microsoft. Microsoft just had a great year, and they're starting off the year once again, just basically executing on all cylinders. Another great stock that has had a nice run, but I still think there's a long runway there for Microsoft as well. They're not like people are suddenly going to quit using Microsoft products or anything else. Yeah, ChatGPT was kind of a bust, but we kind of said that last year whenever all the hype came up about it and everything else. I was like, they got to monetize it. Nobody's figured out how to monetize this sucker yet, and Microsoft hasn't either. However, it doesn't mean they aren't still putting out great products, and it's not like they're not a needs-based business at this stage. Virtually every single business has to use Microsoft or something that Microsoft uses in order for you to do it. They continue to draw you in and keep you in and make it to where you have to continue to use their services, and they're just kind of eating up market share everywhere all the way around. So Microsoft, again, is a pump it, great stock. Stock number 4 is Ford. This one really shot up the list here. I mean, it shot up like 3 spots, and I don't know why. I don't want anything to do with legacy auto. I don't understand it. That's terrible financials, terrible business model. We are in I get it, low interest rates, high interest rates are really, really hurting the business right now. It always hurts the car business, but shoot, they can barely make money on cars, much less do much else. And what's the growth rate there? What exactly is there? Maybe there's a trade there. I don't know. I understand the PE is ridiculously low. I understand everything's ridiculously low. And it's not because Wall Street's being dumb. It's because the businesses are really, really bad. So for me, I want nothing to do as a long-term buy and hold investor. I don't want anything to do with Ford in my portfolio. So for me, it's a dump it. Stock number 3 is Amazon. Again, another stock we've been buying over and over and over and over again. And it's good to see folks are still putting their money into Amazon there. There's a long runway for Amazon. I don't see them slowing down anytime soon. I think that the big bets, basically, they were losing a lot of money because they overgrew, kind of like the post shutdown and everything else like that. They basically overexpanded during that time. They paid the consequence for it in terms of share price and in regards to their financials looking poor. But now it is basically just set up to really skyrocket. That free cash flow is just going through the roof. And I think we're going to see a big EPS number from Amazon this year. So for me, it's a pump it. I'm so glad that we were buying it when it was beat down dog and everybody's saying Amazon's dead and just ridiculous stuff like that. Per the usual, Wall Street being completely wrong per their usual. So I'm glad we're buying that stock there. Again, it's trading a little bit rich. It always trades itself a little bit rich, but they just had great earnings once again. And I think we're going to have even better earnings as the year winds on. So Amazon definitely is a pump it for me. Stock number 2 is Apple. Well, you guys know it's my favorite stock, but out of the big 7, the magnificent 7, outside of Tesla, which has it struggling for a whole different reason, it's basically Apple, still stuck on Amazon. Apple is finally on its way down. Everybody else had their crater down in 2022 and had not bad financials, but had their numbers dipped significantly. And Apple just didn't. They continued strong all the way through that time. And we're finally seeing the numbers kind of flatline and probably will start petering off here as the year comes. But you guys know my thoughts on Apple. It's still trading a touch rich right now, but a couple of quarters of so-so to negative earnings essentially. And we're going to see that stock price fall. And we're going to see that valuation fall more importantly. And I think Apple's got something big up their sleeves in regards to AI coming, into this year, beginning of next year, whatever the case is. They kind of keep that kind of quiet. They keep everything real close to the vest there. So it may provide us with a great opportunity to buy Apple stock this year. And again, it may be one of the steals of the stock market this year. So it's definitely one I'm watching. You guys know it's a great company. It's been a great company for 30 plus years now. So for me, it's absolutely a pump it. And I think we're going to get some opportunity later in the year here for some really great pricing on Apple. At least I really hope we do. And on to the last one here. And I don't know, you guys tell me if you know what stock it is. Comment down below before you actually see it. But the last stock we're going to talk about today is Tesla. Look, I completely understand everybody's frustration with Tesla. I'm frustrated too. A lot of the problems with Tesla right now are self-induced. They're self-induced problems. Their past two earnings calls now have not only have the numbers not been so great, the calls themselves have not been all that great to a disaster, depending upon how you kind of want to rate things. I understand that completely. But what I do know is that Tesla is continuing to execute underneath. We're getting some honest timelines from the company, which has never happened before. And a lot of the hype train has died down. And a lot of folks are realizing that all these pie in the sky things, and I don't know, Elon's going to be on Mars in 2 years, and so is the stock, and all this other craziness like that we never believed in here on this channel. We thought Tesla was a great investment, just not this ridiculous. It's going to be, $5,000 per share in 2 years or anything ridiculous like that. All those things are finally kind of crystallizing in a lot of investors' minds. And so you're kind of in a downtrend right now. And this is just part of what happens. The money is flowing to other places, to other companies that are clicking on a high level right now. And that makes sense. But on the flip side, that also means opportunity for folks looking to add or build out a Tesla position. And so for me, it is a pump it, but I think you've got to be patient with it. It's not going to be this rocket ship up. It's going to be more, and even if we get a run, it's probably coming back down because Tesla is the ultimate roller coaster. I said it kind of in the video that I did right there, kind of my Tesla preview for the year. Man, I wouldn't be surprised if we see Tesla dip into the mid 100s, which we're pretty much almost there right now. I also wouldn't be surprised if we end up getting kind of close to that $300 level later on in the year as things start to pick up. So there's definitely could be opportunity here, but you got to understand that roller coaster. You got to understand what you're getting with Elon, more importantly, and it's going to be wild. It's not going to make a lot of sense. And this is just part of the journey. It's been this way forever. It's going to be this way probably forever as long as Elon is at the helm of Tesla. So if you understand that and you're willing to deal with that, then it's definitely a pump it for me. And no, PayPal didn't make the list this time. Apparently retail wants nothing to do with PayPal, but that video will be coming on Sunday. So make sure you're subscribed so that way you know exactly when that video drops and you get my exact thoughts on PayPal's earnings. Because I think I might shock a few of you guys with some of the things that I'm gonna say in that particular video. And don't forget, the sale for my group is live and monthly memberships are going away here shortly because we're revamping the stock course and it's going to be robust. And basically at that stage, we're just going to only offer annual memberships with the release of that course there. So make sure you get yours. It's the Valentine's Day sale. It'll be the pinned comment down there. If you want that, along with, basically 5 courses for free, you get to use the stock analyzer tool for free. You get to be a part of the best 6, 7, and 8 figure Discord out there. Jump into my DMs, jump on our live Q&As. There's so much going on there. We have so much more coming to the group as well. Make sure you check it all out and check out that pinned comment and see if a membership's right for you before those monthly memberships go away. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.